And we are live. Welcome to the ZIBWAM, Zoom in between Wall and Main. My name is Seth David, and I'm your host, and we have lots of panelists on. And of course, we have a very special guest here with us today. Avalara, Jesse Powell, is going to be giving us some information, educating us about sales taxes, and specifically what it is that Avalara does as far as helping us make sure that we never have to worry about sales taxes ever again. And that's it's something I sort of came up with when we were talking last week. I was talking with some of my friends here at Avalara, and I said, I'm going to make people love sales tax because they're never going to have to worry about it again. And by that I meant I'm going to introduce you all to Avalara, the products that they offer, and how it will just sort of take away all of your sales tax headaches. So Jesse, thank you, of course, for being with us today. Welcome. And why don't we start off in our usual style by having you tell us a little bit about who you are, what you do, and whom you do it for.
Absolutely. Well, thanks for having us. Avalara is very happy to be here as well. So just to reiterate, my name is Jesse Powell. I am here from Avalara. Just a little bit of background about myself. I am a business development manager with Avalara. I play a role of interacting with software publishers like Intuit and Magento and Salesforce and helping to integrate our software. Previously, I worked as our sales manager for the SMB market and was really focused on the Intuit space. So QuickBooks Online, QuickBooks Desktop, a lot of their e-commerce channels as well. So that was really kind of my focus, and been here for about 2 years. And it's that focus in the SMB channel that really brings me to have this conversation with your group today. Prior to Avalara, I was a microfinance consultant. You'll see a picture of me up there. I used to actually live in Lagos, Nigeria, of all places, but really grew a passion for helping small businesses. And that kind of interest, and when I came back to the States, is really what landed me here. I think Avalara is a great place. Love what we do, which I'm going to share quite a bit more with you about in just a minute, so you'll get to see our technology and how this all will play out. Who is Avalara? Avalara is a sales tax automation company, really a compliance automation company. I'm going to give you some more facts about that, but let's just leave it at that for now, and you'll see a little bit more about it in just a few slides.
Great. And so let's dig right in. What have you seen to be the biggest pitfall in small business efforts to become or stay tax compliant?
Yeah, that's a great way to kick this off. So one of the hardest things out there today in managing sales tax and small businesses are dealing with is just education, right? The complexity and this really, it's just a blind spot for companies today is how do I manage sales tax if I don't even know what it is I need to do, right? That is one of the biggest challenges that people are faced with today. I'm going to skip ahead a few slides and I'll come back to these a little bit later here, but what I'm showing you right now is kind of I guess a doctor's diagnosis of someone's sales tax problem, right? These are the major challenges that businesses are faced with if they're trying to be tax compliant. I want to go through these in a little bit of an exercise with you here in a moment, but just quickly kind of glance over them, and you'll see that we've got 6 or 7 things that every business needs to worry about on every transaction that they do. They need to understand their nexus footprint, whether or not they're doing tax exempt or taxable sales. When they do taxable sales, they need to understand product taxability, jurisdictional rate assignment, and once they do all this correctly, they need to be able to file tax returns and really prove what they've done in audit and reporting. Really, I want to break that animal down for you in the life of a transaction and show you what every company needs to do every time they make a sale. And this is the complexity. This is the huge challenge that businesses are dealing with, and this is often a blind spot for them.
And I'm sorry, let me stop you here for a minute because I have a question. I think it sets a precedent for why this is so important, what you're about to talk about here. How many people out there, just on, just very rough, would you say, are getting it wrong when it comes to sales tax? And for that matter, might have huge liability with respect to their exposure due to just not knowing better how to do sales taxes properly?
Yeah, that's a great question. So I wish I had an actual number to give you, but I've probably spoken with 2,000 companies over the last 2 years. I mean, honestly, we're constantly having conversations every day the vast majority of them are really just spending time with us learning about sales tax because they don't quite know how big their own problem is, right? So typically when someone comes to Avalara, it's not necessarily how does your technology work, it's them asking what do I need to do, right? They just are seeking information about how is sales tax going to really implicate their business. They're trying to grow, they're making a business change. They might start using a fulfillment center through Amazon and they have no quite understanding of those tax implications. So having a good grasp on these sales tax challenges and diagnosing a problem is absolutely the first step, and it's something that every business needs to take a real close look at.
And speaking of people who sell on Amazon, I think a lot of us are trained to think that because we're selling out of state, we don't need to worry about sales tax other than sales made in our own state. But that's kind of changing, isn't it?
Yeah, it's absolutely changing, and that's where everything starts, right? And what you're referring to right now is Nexus. And it's exactly what I've got on the screen here, and it's the most important definition when it comes to sales tax. What Nexus is your trigger of a sales tax obligation in a state. Really, if you have triggered a substantial physical presence inside of any jurisdiction or any state, you now are required to collect and remit sales tax. They refer to that as Nexus. This is derived from a Supreme Court ruling, Quill versus North Dakota. I recommend anyone after this call, you can go Google it and learn. But really what happened is it set a precedent that if you have established a presence, you are now required to collect and remit tax. Now that is a very loosely defined term, and that's one of the real gray areas of sales tax, is that the Supreme Court said if you have a substantial physical presence, you have to collect tax. But what is substantial, right? That might be different in one state than it is in another. They all have the ability to make those laws themselves. So every time you go into a new state, you have to start to question yourself. Do I have Nexus? Do I have a substantial physical presence? I put a few questions up on the screen. These are kind of a great litmus test because most states are trending to consider just about any of these activities to be a Nexus generating event. And just the general trend is that this is going to become more and more aggressive as states are continuing to be underfunded. They're in roughly $50 billion in debt. They're looking to generate more revenue. So what better way to generate more revenue than to force more businesses to collect tax? So by tweaking their Nexus laws, finding ways that they can trap you or say that you do have an obligation to collect tax, they can boost their own revenue as well. Does that make sense, that kind of complexity there, Seth, around some of the questions and just as you change your business model or expand to new states, these are very, very important questions to ask yourself.
Yeah, no, I think so. And I think it's important for two reasons. One, most of the people here with us today are accountants and bookkeepers who serve clients who, the clients are going to rely on us to keep them educated about these things. Because here's what happens. The clients don't want to know until they get in trouble. And then when they get in trouble, they turn around and look at us as their most trusted advisor. And they say, hey, why didn't you tell me I needed to collect and pay sales tax in this state? And this is why I think it's so important for us as accountants and bookkeepers to learn about this and make sure that we understand this and, of course, specifically how it's going to impact our clients, especially clients who sell in multiple states where we have this. I mean, if I only sell in the state where I live, then it's kind of easy, maybe. California even is where I live, and is very complicated because we have so many different districts. So even with wherever you sell in California, there's so many different little smaller rates that make up the whole tax rate that you're collecting. So we think, oh, it's easy. I just collect, I'm in Los Angeles County at 9.75%. No, it's not that easy, right? And so, what I'm finding more and more is, there are some areas of accounting where it can be really interesting to, get in there and learn and understand how to do the accounting for it so that we can better serve our clients. Sales tax is not one of those areas. I don't find it interesting. I find it interesting to, understand the implications, but at the end of the day, I don't want to spend my time researching this stuff to make sure I can get somebody's sales tax return right. There's much more interesting sort of higher level strategic advising and consulting that I want to do with my clients. I don't want to get sort of caught up in the sales tax part of it, and I'm not trying to, do a sales pitch for Avalara here, but, it makes the point that I would much rather just have a plugin that I know I can rely on that says, here's the tax you have to collect. And whether it's right or wrong doesn't even matter now because we're going to be responsible for it, right? And so that's what I want. I want to not have to worry about sales taxes, but at the same time, in order to convince my clients that they need something like this, I have to be able to be in a position where I can educate my clients about all these implications. And for those reasons, I think it's really important that we understand, at least at a high level, what's going on sales tax-wide, what the implications are. For years, we've gotten accustomed to the idea that, I don't have to worry about sales in my own state, but like we just pointed out, I do have to worry about sales in other states now. And I've had clients in California get letters from other states saying, hey, you had a sale in our state and we never got the sales taxes on this. So you either need to go get it from your client or pay us yourself. One way or the other, it needs to be collected. And I mean, I'll give you an exact example. I had a construction company client. This is actually going back a few years already before, all the more recent changes started taking place. And they had bought an expensive piece of time clocking equipment, right? So their employees could clock in and out, like one of those big clunky things that you put on the wall.
Yeah.
They put their punch cards in. They bought it from a company that was based in Texas. And the company being based in Texas didn't collect the sales tax from my client who was in California. And then I guess the Department of Revenue for the state of Texas caught up with that client and audited them and said, you never got the sales tax on this sale and paid it to us. And the company didn't charge it to my client. Well, now the company was sending my client a letter saying, hey, we made a mistake. We never collected the sales tax from you, and we need to collect it now because our state is asking us for it. And my client was like, wait a minute, this was like 2 years ago. I don't want to deal with this. It's a lot of money they were asking for because it was expensive equipment, and sales tax always being based on a percentage of the sale. The sales tax amount was substantial that they were trying to collect. And my client was basically like, you know what? They were telling them what they could do with their sales tax. So, but the reality is my client legitimately owed the money to you could look at it one of two ways. They owed it to the vendor who sold them the equipment. Just because they forgot to collect it doesn't mean that it's not, my client isn't burdened with having to pay it, right? And I suppose people could argue that both ways, but I'm certainly of the opinion that just because I forgot to charge you for something doesn't mean you don't owe me the money. If I realize later that I forgot to charge you for something and you legitimately agreed to pay me for it and everything that goes with it, like sales tax, then, it's due and collectible. And I suppose, courts could rule on cases like that, and it'd be interesting to see the outcome. But,
Yeah. So you kind of touched on an interesting point. I mean, right, auditors are not bound by states. You're going to have auditors traveling all over the country. They're going to, you're going to have a New York auditor based on the West Coast who's seeking out tax delinquent sales, even though you don't think they're going to find you over there. In Washington, we've got auditors that sit on the border of Oregon and watch any truck that drives from Oregon into Washington. They see the truck name, they look you up in the database, and if you're not registered to collect sales tax in Washington, well, guess what? You just had your own company truck enter our state. You just generated physical presence. If you're making sales, they're going to come into Oregon and assess sales tax penalties on what you did not collect. So be very aware of this. And on average, an audit's about 45 days, can put a screeching halt to a business. No one wants to deal with it. It's just a huge nightmare. You just kind of played out a really good scenario of what that looks like, right? It can, it causes a nightmare. A look-back period for an audit, usually 3 to 4 years. If you're not registered to collect tax in a state, the auditor can actually push back about 8 years on you. So, and if you've been, really frauding the state, they can actually have an unlimited look-back period. They could look back to the first day you open the doors of your business. So, very, very big issue if you get caught, in that scenario with your pants down the road. So.
And from what I'm reading online, and Larry DeForest brings this up in the chat here, it's a great point. I'm seeing more and more states are charging sales tax on labor, where like in California, in a lot of cases, it seemed pretty cut and dry, where if it's a tangible product I'm selling, I collect and pay the sales tax. If it's service, then I don't. And then you get into that gray area where if the labor is labor that's being performed in connection with the production directly of a tangible product, then that labor in some cases can be taxable. Like my interior designer clients deal with this a lot, where they are, their labor is being used specifically to design and then create a custom pillow. So it gets really gray in terms of what part of that is taxable, what part is not. Their consulting part is probably not taxable, but the time they spend actually designing the pillow is taxable because of that time and labor is going into a physical, tangible product. So how much of that are you seeing in terms of just more and more states saying, you know what, we're going to tax the labor on service-based businesses?
Yeah, great transition here. So, and that's kind of what I'm showing in the next real big decision that you need to make on every sale. So let me just back up a moment. Let's say you have a scenario, we'll play this out, right? You've got Nexus in a state, and let's just make it simple. You have Nexus in California, and you want to make a sale to a customer in California, and they are a taxable customer. They're not going to resell your product. They aren't some sort of government or school. They need to be charged tax. This is one of the most complex areas in sales taxes. What you sell them now, you need to understand the legislation at the state and local level. Do they determine that to be a taxable service or good? That is a very complex question, and that's the one you just brought up, right? Service, it may or may not be taxed. There's millions of product and service tax exemptions out there. The states all decide whether or not a specific, service or good would be taxed. Want to give you just a couple of interesting examples, right? You talk about software, for example, in Colorado. If you had a downloadable software, it would be taxed at the local level, like Boulder County, and the local RTD tax would be applied, but the state would not charge tax. You go on a balloon ride in Missouri, if you're tethered to the ground, it would be taxable. If you were able to cut the cord and detach, that whole ride would be non-taxable. It would be exempt from tax. You've got bagels in New York. If you slice it, it's taxable because there was some sort of, service involved to make that happen. If you don't, it would be exempt, right? These are incredibly complex. These are kind of some funny, silly ones for you, but, you talk about installation labor. I think it's taxable in 22 states. Downloadable software was taxable in about low 20s 4 years ago. Today, it's taxed in at least 33, right? So as these legislation continues to change, so.
I've got a question that's directly related to services. I live in the state of Washington, and I just found out the other day that apparently a subcontractor that does labor is supposed to, collect sales tax. And the reason it came to my attention, my client was asked for a retail certificate or a certificate so that apparently the client wants to claim, the vendor wants to file as a wholesaler. And so the question I had, and I called the state, was, well, what happens if the subcontractor doesn't collect the sales tax? Is my client, the general, liable? And I didn't get a real clear answer. Does Avalara have any resources I could search to try to resolve that question? Because it was, it's kind of like it might depend on whether sales tax was even paid at all, or should my client know, or what? It's kind of crazy.
Yeah, that's a very good question, very specific. So anytime those kind of questions come up, I've got to start with the answer, it depends, right, which is what you've already probably discovered. So, because every state and every scenario is going to be slightly different. Your question, though, is does Avalara have resources to answer those? Yes, we do. We have a division. We have a group of people here. They're our professional services group. I could absolutely get a call with yourself and that team. They are led by an 20 plus year sales tax auditor for the state of California. He now works for us and just tries to provide rulings or answers on questions like that. And also we facilitate lots of audit protection. If you want to do a self-audit, we can leverage our technology to do that for a business, registrations, nexus studies, things of that nature. So I wouldn't say that I'm equipped to, with the information you've given me, answer that question, but we would have the resources to do so, yes.
Okay, I'll reach out to you, but I just need to get more information from my client as to what's going on before I do.
Yeah, it sounds like a very challenging one, especially if you got contractors, general contractors. Is sales tax applied at the sales price or the cost of the goods that were purchased? Does it become real property or tangible property at the end? There's so many questions, and it's going to depend on the state as well. So.
Okay, thanks.
Interesting. That's an interesting point. Can you guys hear me okay, by the way? Can everybody hear me?
Yep.
Okay. First of all, question from the chat. Actually, before I even get into that, because what you and Dennis just discussed made me think of an interesting question, which I want to make sure is clear. So beyond the product that you have that plugs into my QuickBooks software to determine sales tax, you can also consult with companies to help make sure that they're sort of audit proof as much as that can be done. So companies can consult with you or hire Avalara to consult with them to help them make sure that they're in compliance.
Yeah, tax rulings or registrations or, like I said, audit defense is a component of our business. So that's something we only have as a available resource for clients of Avalara, right? We're not trying to make that a book of business. It's really a support feature for the clients that are using our technology. But they operate on a statement of work basis, right? So if there's something in a unique tax challenge or a tax research project that we need to embark on, we can be a resource, or we also have great accounting channel partners there. So if that's something that you need the state and local tax expertise, we can do referrals as well.
So now I sell a lot of digital products, right? So we're not talking about downloadable software. We're talking about somebody goes into my shopping cart, makes a payment, and they get an email with a link to download an Excel template or an ebook, or maybe an MP4 file, which is a video that I have produced so that they can watch it on their own computer. What are the sales tax implications there? I mean, historically, my understanding was, no sales tax on that. One of the reasons I loved it. Is that changing? Are ebooks and things of that nature, digital products, being taxed now?
Yes, they actually are. And I can give you some examples of that. And we've got tax research. We call it goods and service categories, right? We have thousands of goods and service categories at Avalara that we maintain tax research on for all of the 12,000 tax jurisdictions here in the U.S. So one of those goods and service categories is obviously going to be, we got a couple hundred that are just in relation to downloadable software and those types of offerings like ebooks. The reason we have so many different tax categories just in that little niche is that every little nuance about how you define that product could change whether or not it's taxed. I'll give you an example. If you have software that is downloadable, that would be taxed differently than maybe that's load and leave. If you have software that is required some sort of implementation service that has a required, extra service associated, that would be taxed differently in certain states than in others. So we have created goods and service categories that are very specific that will be associated with your product depending on exactly what it is that you're going to sell. That allows us to know what you're selling and make sure that everywhere you sell it, we have the right legislation and laws in place to support that tax decision.
Interesting. So I have to be careful when I'm setting up the Avalara product to make sure that my item list is somehow categorized, very specifically defined down for you guys, so that when you're applying your algorithms, you know exactly what all the implications are. So it's not enough just to say, hey, I have a product that I'm selling. There's a place I can go when I'm linking up Avalara and my items list to say, hey, this is a digital product, or this is a software product. So I need to make sure I get that granular with respect to the products in my product list.
Yep, and it's something where you don't change, your naming or your SKU convention at all. You take what you've done already and you just tie it to our system, and you tell us. You could have SKU 1, 2, 3, 4, 5, and you could say that this is my downloadable ebook software, right? You're not going to change anything you're doing today. You're just helping us to recognize, what your naming convention is. The great thing is you do it once and you can kind of set it and forget it, right? And as soon as you go and change your product SKU list, you can come and change it with us. But it's a very, very easy process to do. Something I'm going to show you a little bit of here in a moment when we get into our software.
Okay, so I think we've covered some important ground here in terms of what makes sales tax very hard, and we've established the fact that there's no question, will it change? It's changing right in front of us as we speak.
Yeah.
So I wonder if you can talk to us a little bit about the landscape of the U.S. taxing jurisdictions and how they're structured, and also some of the active legislation being debated at the federal level that might have huge impacts on this soon.
Yeah, it's a great point. So a few questions, right? It's always changing, right? This is an ever-moving target. We've already talked about a few of these nexus changes. One thing I want to kind of highlight there is something that's becoming a trend is known as kind of like the Amazon laws, click-through nexus. This is something that is kind of hitting headlines over the last few years, and I'll just give you a quick story or backstory as to why this matters and what happened here. So Amazon got caught by the state of New York. They had created some sort of affiliate relationship with businesses that were based in New York, where on that business's website, there was a link that would direct you to Amazon to buy things. That link on some other company's website, that was enough to generate physical presence in the state of New York. Now, if you just stop and think about how crazy that is, right? Just some link that's on a New York company's website that directs you to Amazon. Amazon doesn't have any other physical presence. They would have their employees sign documents that said they won't travel to certain states because they were very careful about where they did not want to generate presence. You know, given the volume of sales, that's a huge windfall for them. If they don't have to charge sales tax, they have a massive competitive advantage in the state of New York. Well, New York caught them, and that was a huge battle. Amazon tried to fight. They ended up losing. The Supreme Court wouldn't even hear it. They threw that case out. So Amazon lost to New York, and all these other states saw what happened, and they started to do the same, right? If New York can win all those sales tax, all that sales tax revenue from Amazon, why can't we, is kind of the thought. The problem there is that people start to think, oh, poor Amazon, right? Oh, they got caught. And maybe they don't think, oh, poor Amazon, because like, oh, they deserved it. But the real problem is Amazon has now gotten behind this legislation. And they said, hey, if this is going to happen to us, it should happen to everybody, right? They want to level the playing field. So rather than fighting this, you know, they're starting to just say, that's fine, we see the trend, but if you're going to catch us, you should catch everybody, kind of a thing. So it's creating more and more scrutiny around kind of like a click-through nexus, right? A digital presence rather than a physical presence. And it's something that's kind of backing this, you know, the Supreme Court at a congressional level into a corner, right? They made a ruling around you have to have substantial physical presence. And they're starting to see that that's not necessarily what's playing out in the states. And so there's things like the Marketplace Fairness Act, Remote Transaction Parity Act, Online Sales Tax Simplification Act. All of these are telling the same story. They're trying to come out with a way that levels the playing field. Kind of one of the, none of this is in place yet, but one of the ones that I've seen or heard a lot is, you know, if you hit a certain threshold of sales into a state, you're going to have to start collecting tax regardless of whether or not you've generated presence. That's one school of thought that's starting to get a lot of traction. You know, I've heard it be somewhere maybe around $1 million, which is a lot, right? But if you did $1 million of revenue in Texas, you'd never been there, people just bought online, you know, that would be some sort of threshold. They'd say at this point you now need to collect tax. So there's a huge shift in trying to find a way to maybe create some sort of uniform way of defining nexus across multiple state lines. As of today, though, we're still relying on Quill versus North Dakota and then the unique nuances that exist from state to state. So
great question just came up in the chat. What about affiliate income? So I make affiliate commissions from somebody else's sales of a product. Am I, as the affiliate who's earning the commission on that, subject to sales tax?
You make that's a great one. So it's like a referral there. You know what? You're going to hate my answer, right? It depends. It's going to depend on the state. It's going to depend on the scenario, what was sold, right? Was it even a taxable good that was sold and you got generated revenue out of it? This could become just a whole nother question as to what state are you in, kind of what is the company's nexus footprint that you're working with? So I hate to say I don't know the answer, and I have to be careful about answering questions like that because, you know, I can't provide legal tax advice, you know, on a whim like that.
Years back when a lot of this started to happen, I think, Amazon actually canceled its affiliate program in the state of California for this reason, because it was so unclear as to who had to, you know, collect and pay sales taxes on the sales. And I think because they had to, you know, now collect and pay sales taxes, and I don't know if they actually got hit with having to pay any back sales taxes, but at a certain point they killed the affiliate program in California. They may have brought it back since. I haven't looked, but I remember being I had this whole Amazon digital wheel on my website with all these books that were related to accounting, and it was part of my affiliate thing with Amazon, and it went away. That stream of revenue just all of a sudden one night disappeared. And so it is interesting. I think the question is, if I make an affiliate commission on a taxable product, the logical conclusion seems to be that it would not be taxable because it's just an affiliate commission. I'm not the one who sold the taxable product. But as you pointed out, you don't want to make any assumptions. You have to understand, like you said, what the rules are, where you are, where the sale was made, and this is where it's getting so incredibly tricky. This brings us to I'm sorry, go ahead.
Yeah, I want to make sure I mentioned, we've just talked about Amazon 3 or 4 times, and it's something that I think a lot of people are seeing is businesses that migrate to using fulfillment by Amazon. That's become a real hot topic and a question we get, on probably 3 or 4 times a day at least here is, what does that do to my business or my client's business? I just want to make it absolutely clear that if you have leverage fulfillment by Amazon, meaning you give Amazon your product and then they go place it in fulfillment centers, there's about 20 states now that have fulfillment centers. Amazon will take your product and they will put it strategically so that they can fulfill orders in 2 days, right? They can use their Prime, their slogan, and say, we'll get it there really fast. By putting your inventory in those centers, you're generating physical presence. You're generating nexus in about 20 states. Amazon does not do a good job of telling anybody which centers your product has gone to, nor are they limited in doing it, on a whim, right? They can take product and put it in 3 or 4 distribution centers and then tomorrow move it to 6 or 7 different ones. So that is a huge issue. If you've got clients who are going down that road, a lot of people will say, I'll just concede nexus in all 20 states. I'll assume that my product will be there and I'll start collecting tax on any sale made into those 20 states. Right, so that's a huge hot topic is fulfillment by Amazon. As more businesses start to leverage that, just be aware of the tax implications of having your product, your inventory, being stored somewhere else. Even though Amazon has taken it from you, it's still your product until it's sold. So,
got it. Right, so we're about 30 minutes in. Why don't we have you flip over and give us the demo, and then we can come back and cover the rest of this. Somebody was asking, by the way, if this deck was going to be made available, and Brian answered that yes, if you email Brian, he will make sure that you get a copy of this deck.
Yeah, absolutely. This is the last slide I'll show you, and then we'll get into the technology, and this is the great way to start because it just gives you a full picture of what will be happening. I'll just describe it briefly here. So this top right invoice picture is going to represent anywhere you're going to need a sales tax calculation. Today we're going to focus on QuickBooks Online and we'll run an invoice together. But what will happen is in real time, the moment you need a tax decision, it's going to actually send your transactional information to Avalara. We're going to look at your Nexus footprint. You're going to look at the product and service that you're selling and the legislation around that. We're going to look at all the rates that are applied at that exact location. We'll even validate those addresses, and we have a proprietary technology so we know exactly where that's occurring and all the tax laws that should apply. We make that determination for you. We tell you how much sales tax should be applied. We don't give you a rate. We actually give you the full tax and put it right back into QuickBooks. Within Avalara, we keep a full record of everything you've ever sent us. You have your own account with us. You can go and look at it. I'm going to show you what that looks like. And from there, we can file and remit your sales tax liabilities back to every jurisdiction here in the U.S. So if you are interested in also not just the complexity of collection and calculation, but also filing the returns themselves, about 80 to 90% of clients who use us to calculate tax just have us file. So that is a major component. We do guarantee that the entire process is done correctly. You mentioned it before, right? I want to have a plug-in where I don't need to worry about this, right? Well, we actually guarantee our accuracy of our tax decisions, and we will guarantee to create, file, and remit your returns on time and do them properly. Just to give you some scale, we do about 2 billion tax calculations here and file nearly 1 million sales tax returns now on an annual basis. So it's a incredibly well-oiled machine, right? We've got over 20,000 users of our software in just about every vertical. You got QuickBooks, Intuit, NetSuite, Sage. You go up into Epicor, Infor, all the real different software products that are out there. We've really created a partnership with. So.
Great. And while we're transitioning into the demo, does anybody want to unmute if you have any questions you want to ask live? We'll give you a minute or less to do that.
I have a question.
Okay, just tell everybody who you are.
This is Katrina. Hi, Jesse.
Hi, Katrina.
And hey, Seth, you're Mac Hansen today. Congratulations.
Thank you.
My question is, what if someone is still using pen and paper?
Sorry, I couldn't quite hear you there. What were they using?
Pen and paper to keep track of what's going on in their business, of their sales.
Just shoot them.
Yeah, I know. I know. It's a whole transitional period. But nevertheless, a lot of these mom and pop shops are still doing that.
That's crazy.
And yeah, so is your question if they're doing that, how could they leverage Avalara to solve the challenge? Or if they're doing that, you know, what would my suggestion be for them to, because my immediate suggestion would be that they're doing it kind of the hardest way possible. But there are lots of ways that, you know, clients who don't even have an ERP or accounting system will just give us their information, you know, in an Excel file, right? If they can do it that way, or they'll give it to their accountant, who, unbeknownst to the client, the accountant just gives it to us, right? And so the accountant will leverage our technology on behalf of the client. But in some way, right? If you're just doing pen and paper, you know, we can't really be a resource without us getting a view of your transactional information or your, you know, aggregate information to file your return. There's at some point needs to be a conversation, you know, hopefully through Excel at the very minimum as to what's been done. Does that answer your question? Sorry, Katrina, if I don't.
It does. Thank you.
Okay. Yeah. So here we are. I'm in QuickBooks. Still sharing my screen. I just want to confirm, Seth, can you see that? I've changed screens.
Yep, we see Powell's books.
Yeah, that's Powell's book. So I'm in the QuickBooks Accountant QBOA version. It will work the exact same in QBO, right, if you're on a standard version, as well as in desktop. I will note that we are in the App Store. You can go and just try a free trial of our software if you're using QuickBooks Online. Feel free to give it a shot. It's available there. There's, you know, set a few clicks, you'll be up and running. In the interest of showing you how it works, I will kind of jump into that overview diagram we did before, and we'll run an invoice together. We'll actually do a couple, just to show off some complexity. Today we'll do an invoice to California. We'll have a California customer. And as you see, everything's pre-populated here. I'm shipping to Half Moon Bay, California, and I have a billing address of Seattle, Washington. So I'm going to bill someone in Seattle, but I'm going to ship my products to California. I'm going to do a few items and kind of touch on some of the things that have already come up. I'll sell a big computer, just a tangible good, pretty straightforward. If I have Nexus, I'm selling a tangible product, it should be taxed. I'm also going to sell software as a service, some sort of a software license. I'm going to do a software maintenance contract, some sort of maintenance or service agreement associated with the sale of the software, and then I need to ship my big computer, so I will use freight as well. Now, the big difference in what you're seeing here is if you've downloaded our plugin, there's a nice little button that shows you this estimate tax. This is a great feature, right? Instead of trying to select a tax type here where you're saying, I know that in Half Moon Bay, California, that there's all these different layers of taxing jurisdictions and you're continuing to update those, you don't have any tax tables. You simply click this button, estimate tax, calls Avalara, we return the tax decision. Right? We've done all of the complexity. We looked at whether or not I have Nexus. We looked at each individual product item and identified, is that taxable in the state of California and in Half Moon Bay, California. And then we looked at the rates to apply, and we brought back that full decision of $960.69.
And so there's even tax on the freight, huh?
Yeah, so you'll see we give you the tax decision. If you want to see a breakdown of this entire workflow, that's available within your account in Avalara, which is going to be my next step. I'm going to take you there and show you this exact invoice and what it looks like. So you can see at each individual item what was the tax that was assigned. It's a very complex tax decision. You're going to see in a moment why we don't break it out inside QuickBooks. This would become a nightmare and would look terrible to a client. So I will save this invoice so that it's actually a committed document. and then I will follow it and show you guys what this looks like on Avalara's side. So that was invoice 1059 saved. I'm going to leave QuickBooks here and we can come back, but I'm going to go into our tax engine, right? This is that A in a cloud that you saw in the diagram before, and I'll log in. Let's do this. Murphy's Law, right? Let's see here. Let's try a different browser. Any questions about what happened in QuickBooks as I'm logging in?
So just to clarify, that estimate tax button will be there once I've gone into apps.com and connected Avalara to QuickBooks.
Yep. And one thing we do is after you download, just close QuickBooks and open it up again, and then everything will kind of refresh and it'll be a part of your invoice process.
And then a question in the chat, do you guys sync with Xero?
With Xero, we have an interesting relationship. So they are, I think, back-end using rate determination from Avalara, something that's a little bit unbeknownst to most people. And then they have the ability to export all their sales to a filing service that we do. So it's kind of a gray yes and no question there. We do not provide a traditional integration like you're seeing today at this time. We hope to soon. But there is the option. It's called Trust File. You'll see inside Xero you can push your sales data to us, and we can do the filing or give you a signature-ready return.
And what about Sage products? You do have an integration with Sage, don't you? But it's more of a back-end kind of integration?
It's very much the same as what you're seeing in QuickBooks. So we have partnerships. I think actually with Sage we're OEM, so they actually call it Sage Sales Tax. It's something that you actually get through Sage paperwork. So we're a very, very tight-knit integrated partner with the Sage offerings, whether it's Sage 50, Sage 100, all the way up. So apologize for the delay there. I'm not sure what was going on, but I am now inside of an Avalara account. This is a unique account to anyone who starts using our service, right? You're going to have your own account number. No one else is going to see this information. We give you updates and notices about what we're doing, but hey, that's the benefit of using Avalara, right? You don't care about last month's rate and rule boundaries and changes, right? There's 14,000 of them last year alone. We're doing this every day. You're never having to make a change inside your accounting system. We do show you some links to our help center if you want to have a better knowledge base or learn about Nexus changes. We've got lots of great information that's continually to be published. But in the interest of this demonstration, we're going to move down the line here, and I'm going to show you my company's transaction history. So let's do Powell's bookkeeping. So in real time, it called Avalara. Well, it left a mark, right? Avalara got to hold on to that information, and we get to now show you the full tax determination that was made. So I'll just zoom out a little bit so you can see more information. So we have two invoices that I've done today, right? We've got invoice number 7, or to customer 7, invoice to customer number 1. These are sales invoices, and total information is listed. As you see, I did one to the state of Colorado and California. Let's open up the California invoice that I did with you a moment ago. Avalara does address validation, the first step of our tax calculation. So as you see, we have valid addresses. Zip +4 is added, but we don't rely on that. We actually then convert it to a latitude, longitude coordinate. That way we know what tax should be applied. We show you any little details about your invoice. And then at every individual line item, we made a tax decision. So I'm going to walk you through just a couple of these, just to show you how complex this would really be if you try to do it manually. We have a big computer. It's a $10,000 item. It's fully taxable. We charge $950 in tax, and now we show you that there's a state, a county, a city, and a special tax jurisdiction that all overlap at that location. So if you were to try to do this in QuickBooks, you would need to build unique tax items for all of these and then group them and use that grouped tax item when you made this sale. Remember, these can all change independently, so you'd have to go and update that group from time to time every time you make a sale. Just to give you some little background, there's about, I think, 231 sales tax jurisdictions just in the state of California. So as you can imagine, this would be an incredible challenge to do inside QuickBooks. Here's another item, software as a service. You're going to see how our technology knows what's being sold, right? This is my item. This is my SKU. It's a $500 item. We charge no tax on that item. We know that the state of California does not deem this to be a taxable offering. How do we know that? We have one of our goods and service categories associated to the item, right? This is something I did when I just took my company live. I imported my item list and I just associated it to Avalara's goods and service categories. As you can see here, we had a great goods and service category for what I believe to be I'm selling as ASP hosted software, servers not in the state. Now, a software maintenance contract is incredibly complex. As you see, I have a different goods and service category associated here. It's a $175 offering. That's partially taxable in the state of California. It's partially a good, partially a service. They decide that you have to charge it at a 50% rate. So what our technology does is we split it into two separate amounts. You can't even do that sort of decision inside QuickBooks. It's not really capable of doing that. So you then get the right determination at all the layers of tax. As you see, half of it was non-taxable and half of it was listed as taxable. So as you can imagine, if we brought all that information back into QuickBooks Online, it would look horrible, but this is always available, right? If you've got someone who makes a sale and they want to prove what's been done, they have someone calls them and asks, how did you get that tax? You can print this, right? This looks like a nice little invoice, document line item level detail, and it's readily available. Imagine in an audit as well.
I have a question. State of Washington, as part of the streamlined sales tax, accepted the destination-based sales tax methodology. Does Avalara assume everything's destination-based, or is there some source-based?
Yeah, we look at sourcing rules as well. So we'll understand the ship from and the ship to and make the right determination. So if it's a sale from within a state of to another entity inside that state and it's a origin-based state, we're going to grab the rates from where you're shipping from, not from where you're shipping to. There's a real complex one in Texas. We call it the Texas 8-step. You actually have to associate some tax rates from where you're shipped from and some tax rates from where you're shipping to. It's a combination of both. It's an incredibly complex tax decision. We take all of that into account, right? We look at those sourcing laws for you. Additionally, you're going to see in states like Florida, Tennessee, a few others, they have threshold laws where if a product hits a certain value, in Florida it's $5,000, every dollar after $5,000 cannot be taxed by any local jurisdiction. So only the state taxes. We would basically turn off tax after $5,000 at each level that that law would be applied for. So those little nuances, we're going to capture them for you. Sales tax holidays is another one. Back to school, right? We're going to know and understand when a sales tax holiday is occurring and make that determination. In the state of New York, if a clothing item is more than $110, it's taxed. If it's less, it's not. So we not only look at what you're selling, but we make a determination around the product's value, the dates, legislation around thresholds, and sourcing rules. Great question. It's a very complex world of sales tax out there. So this is all available for you. I made a quick note about it, but if you have an audit, right, they're going to come and look at the last 3 or 4 years, and typically they'll pull a sample size of your data. They'll say, I want to look at a month or 3-month period of sales tax calculations. They're seeking some sort of margin of error, and then they're going to try to extrapolate that error over a 4-year look-back period. As you can imagine, having a resource like Avalara and the reporting that we have for every item that you've ever sold and all the legislation to back up the tax decision is an incredibly powerful tool. Right? You don't have a 45-day audit that a lot of people are experienced. You can have a 45-minute audit. You can say, here's my Avalara login. This is the information you need. Tell me what window you want. I'll pull a report and I'll show you everything we've done. So.
That's awesome. So in an audit, you just basically we just send them to you guys.
You can, right? You can have Avalara, that professional service team, be your support. Like I said, though, they operate as a statement of work. So most people feel very comfortable defending themselves using the tools here. We do have Avalara's tax guarantee. So if you have a negative audit result, we can be held liable for the annual agreement of our service. as well as we do guarantee the filings to be done on time. So we will handle any penalties and interest should there ever be such a thing with filing calendars. Just to give you some confidence, right? Someone mentioned the Streamlined Sales Tax Organization. We're the leading provider to that organization of clients. So we're certified, the SST. If you get audited in those states, they're actually going to come through us, right? They're not going to go to you first. And in the event that it's outside the SST, as you can imagine, we've got about a 100-person compliance team managing rates and rules. We've got over 20,000 active users. If there's ever a legislation change that we didn't catch, someone's going to let us know about it right away. Our taxing is going to be updated. We're here to rectify these mistakes as soon as possible. So we are incredibly accurate and really stand behind that.
Great. So here's a funny question for you. I know that it's required for me to report income from illegal activities. What about the sales tax on that income from illegal activities?
Ooh, you're putting me under the gun. I don't know the answer to that question. That's a great question. That's one that I'd turn and throw towards my team and say, how would you respond to this, right? I don't have, I don't know the answer to it. I don't know. Do you have a specific client? Is it something to do with kind of the marijuana kind of industry? That's something that we're starting to really get involved in and see some challenges that we're looking to bridge.
Yeah, those sales are technically illegal at the federal level, even though there might be states that made it legal. At the federal level, it's still illegal. So that is actually come to think of it. But the sales tax is at the state level. So I would think if the states have passed laws making it legal to sell medical marijuana, that the sales tax laws would be caught up with that. You would think.
Yeah, they're getting there, and they're coming out with sort of multiple different tax types. So it might not just be sales and use tax. There's like in alcohol, there's somewhat sin taxes that they apply on top of sales and use tax, and so kind of the marijuana industry is following suit with alcohol and tobacco sales and creating multiple tax types. Something that we're building content around to solve that problem. So we're seeing that more and more states are making that an available sale and a legal sale, and as soon as it's becoming more and more expansive, we're seeing a lot of clients ask for it. So we're approaching there. I thought that's where you're going with this, but I don't know the answer to your question, right? If that's something I'd have to get a ruling on from someone else, and like I said, right, it's going to be probably depends on a lot of different factors.
Right.
Yeah.
Dennis, you're in Washington State. Have you seen any of this in terms of the sales tax implications on the marijuana dispensaries there?
Are you talking to me? Sorry?
Yeah.
Dennis,
the only thing that I'm really aware of is that there's been problems with not necessarily sales tax, but in terms of being able to open bank accounts and having to deal in a cash-based business, and also the federal level where you can only take cost of goods sold, you can't take your expenses. But I haven't heard anything from a sales tax implication, though.
Okay, it'll be interesting to see how that pans out.
Yeah. Something that's changing a lot. So, hey, and I want to kind of finish this picture and this workaround with our technology. So if you've got, the full solution here of not just calculating tax, but filing as well, we have all the information we need to file your tax returns, right? We've seen all the invoices and all the estimates and sales orders, right? And those are all going to be tracked. If you want to, you set up your filing calendar with Avalara. You tell us what states you'd like us to start filing in. As you see here, we can do it in all of Canada, everywhere in the United States, even at a local level. So in Colorado, you have to file a Boulder County or a Vail return, not just a Colorado return. We handle that as well. And we'll show you a breakdown and just a very high level of your monthly sales, non-taxable and taxable amounts, what's your tax liability. If you have to self-assess consumer's use tax, we can absolutely include that on your return, and then the total amount that would be due. So filing returns is just saying, I approve that information, right? You're just telling Avalara, we're clear, that's what you're going to take out of a bank account from me, and that's good to go. On the 10th of every month, we lock down this little worksheet, and then on the 12th, we pull the money from a bank account that your client or you would designate. And then, like I said, we will guarantee that we create, file, and remit each individual return. Most states, they have to be in by the 20th. Others, I think like Maryland, is the 18th, right? We're going to hit all those deadlines. Throughout that workflow, if you have a tax notice that comes to you from a state, you can forward it to Avalara. We manage them for you. And then you get a filing archive, PDF copies or links to what we've been doing really. It's on the 28th or 29th of that filing month. You can come and see a full record of what's been done. Really, this is great for that audit scenario. You just want a full history of all the filings in one place, same as where your transactions are.
And let's say somebody migrates QuickBooks Desktop data to QuickBooks Online. How does that, and they're using Avalara, how does that work in terms of making the switch on the Avalara side?
So kind of two potential scenarios. If they're already an Avalara customer and they're using QuickBooks Desktop, they just plug in their credentials into QBO and they can start invoicing the next day, right? So that would be a very easy transition. If someone is a QuickBooks Desktop and not a customer of ours and moves to QBO, they can start using us maybe at the first of a month of a new filing calendar. If we want them to start at the middle of a month, right, we can just do an upload of anything we've missed. So very common, a customer will start with us, you know, not at the most convenient time given their filing schedule, but they will just, you know, work with our implementation team and say, all right, let's capture all the invoices in the first 10 or 15 days. That way we can start fresh and start filing for you.
Great. And then we're coming down to the end of our hour, so I want to make sure we cover something very important here, especially since our audience are mostly accountants and bookkeepers. We have, you know, one of the trouble, that's great English. One of the problems that I run into sometimes with my clients when I'm trying to recommend a number of different products, especially where the products from the client's perspective make my life easier, not theirs, the clients will offer some resistance in terms of, well, you know, why do I need this kind of thing? But in the bigger picture, I guess what I'm getting at is, you know, what are some of the benefits that accountants have by referring Avalara to their clients? And what's the life cycle of a referred client? You know, sales, implementation, support, 10 years later, you know, what are the implications there in terms of, you know, what benefits are available? Is there a referral program of any kind? And, you know, I guess, again, bottom line, bigger picture, why should accountants refer Avalara to their clients, besides the obvious that I hope should have stemmed from what we've all just seen?
Yeah, no, I absolutely understand. So kind of a few questions. I want to break it down into two parts. So first, if you refer a client, what does that look like for them, right? So we'll stay just within QuickBooks Online today, right? They can go download the app themselves. It's very intuitive. It walks them through. There's some guided videos if they need it. But this is sort of a timeline for someone who decides they want to start using our service, right? This does not take, you know, days and days. If they wanted to sit down and start calculating tax, they can do it in a matter of minutes. If they have a very complex product offering and they need to speak with us, that might take a little bit of time of configuring, you know, their items to our tax good categories. When you do refer a client, right, they go through that implementation, go live. It's very much self-service. If they need resources, we're here to support them. And then they have an account manager, someone for the life of their time with Avalara, someone that is, you know, a friendly face. It's the face they see when they log into their account, and they have a direct number to reach. So you know when you're giving someone Avalara that they've got support, they have resources. We are really the industry leader and experts when it comes to sales and use tax automation. So feel confident when you do that, right? Secondly, you mentioned, you know, why would clients, you guys want to do this? Well, you're a thought leader, you're a trusted advisor, you're taking care of your clients, right? This is a huge blind spot for them. If you can offer them a solution where they can plug in and not think about it anymore, I mean, that's a huge win-win. And for you guys, most accounting professionals hate dealing with sales tax. You've already touched on it before. You know, we did a survey a couple months ago, and I think it was 50% of the accountants we surveyed said they'd rather go through a divorce than a contested sales tax audit. I mean, just kind of a joke, but just to give you an idea, right? There's something that no one wants to deal with. And when the day comes, if you get audited, you're going to be so happy you have a resource and a technology provider like Avalara supporting that. What's in it for you guys beyond what I've just mentioned? We love to reward accountants just for referrals, right? So I have a link here. I'll share it with the group, but this is just a little landing page we set up just for you guys. If you want to tell us about a client, refer somebody, just the referral itself, we give you guys $75. I know Diana Waterman, who's sitting in on here on this call, she runs this program. She directly will email you basically a downloadable gift card. So not only do you guys look good, but you get to go, you know, spend some money and have some fun with, you know, making sure that you did the right thing and get cash. Sorry?
We can go shopping on Amazon with it.
There you go. There you go.
So that's perfect. And then we can think about who's paying the sales taxes on that while
Yeah, exactly. Exactly what you can do.
So for those of you accountants and bookkeepers who are watching, what you may want to do with this is, first of all, look at all your clients who can use Avalara, and then add them up and multiply that by 75, so you can start to see by referring them, something that they can use. It's not like you're doing it just to get the $75, but as a byproduct of referring your clients to something they can use, it's going to make yours and their lives a lot easier. It makes sense, and I'm always curious to see how that stacks up. And then think in terms of, can I refer 1, 2, 3 clients a month to a product like Avalara? Really easy to do. Just put a page on your website and put up, that's what I've done. You can go to SethDavid.com and you'll see I've got a partners page, and actually I've got a page dedicated specifically just to Avalara. So it's actually SethDavid.com/Avalara. You'll see what I've done there, and I'll probably take the video from this very, zoom in and stick it up there after it's been processed. As another way of showing people, hey, here's the benefits of using a product like Avalara. It's something I certainly believe in, and why not? And and then so how do we get that? So we sign up here to get the what do we get, like an affiliate link or something that lets you guys know the referral came from us, or we have them fill out this form and let you know that we sent them.
I have a quick question.
Go for it.
What's the cost?
The cost of our service is usage-based, and so it's a great question, right? We bill based off of your transaction volumes, and we have transaction tiers that you can join into. If you go onto the app, I'll even kind of just go there to answer this question. We show some pricing for the kind of the lower end of users of our software, mostly in the QuickBooks world. So let me go here. Let's just search for Avalara real fast. So we look at your transaction volume, and we have a basically a monthly bill for the transactions you use, and then also we bill per sales tax return that's filed. I don't want to misquote based off of our agreement with QuickBooks. We've got some very advantageous pricing. So as you can see here, apologies for that blue line. I'm not sure where that came from, but up to 250 transactions, you're looking at about $5 a month to use our sales tax engine in QuickBooks Online. You then have an Avalara file. You'd be billed about $49.99 for a sales tax return that we would be handling for you. So that's that full end-to-end solution. Like I said, you can have us calculate, and you can continue to file yourself with our reporting if you'd like. As you see, it'll scale. So as you do more transactions, the cost per unit will always go down. That's the same scale with our filing. So if you are filing in every state, I would absolutely recommend you have a call with one of us because we do scale well with filing returns. So if you're doing 1,000 tax returns in all these different jurisdictions, right, you're welcome to give us a call, and we have lower pricing per unit options. Does that make sense?
Yep. So this page is accessible because I know a lot of people ask this question and they want to get, especially the first thing the client's going to ask is, how much is it going to cost me? That's the client's biggest, I want to say, fear point, I think, in terms of considering whether or not they want to use Avalara. They don't want to get charged an arm and a leg, obviously, and they're worried if they're doing a lot of transactions, it's going to cost them a lot. So maybe somebody can drop the link to this page in the chat. This way everyone can bookmark it and save it. I think that would be really helpful. And then
this is just on the App Store, by the way, just so everyone's clear. This is right within QBO on the App Store. You go into our app, and pricing is available for you to see right there as a snapshot.
Got it. Perfect. So this this would be good for you guys to bookmark, because when you're having a conversation with your client, you want to, before you have the conversation, it wouldn't be a bad idea to go through their accounting file, get a sense of how many invoices are being processed every month, so you can sort of pre-calculate roughly what you think their monthly cost is going to be. And for those of you who want to do value pricing, or my preferred variation on the theme, which I like to call power pricing, in other words, if you're going to be doing a flat rate billing every month, then you might want to think in terms of how you can just build the cost of Avalara into your billing, although they're going to take it directly, though. There's no way I can say as an accountant, add my client in QBOA to Avalara, or can I?
We do a direct end-to-end relationship for a number of reasons. We want to have service level agreements with the client themselves, and in the event they call us, we want to recognize them as an end user. We are creating kind of a one-to-many dashboard for accountants. That's going to be coming out very, very soon. But as it stands today, it's a much better user-friendly experience if a client onboards through their own QuickBooks Online environment. I'm using it, though, I'm showing you here, in my version of this, right? I can have my clients' books who have downloaded the app, I can see it operating inside their books from QBOA.
Sure.
So kind of a two-prong answer, yeah.
Right. So the only point I was trying to make is, so you're not going to build Avalara into your pricing. You know, a lot of times I recommend doing that where the opportunity is available to. But still, you want to do the calculation ahead of time before having the conversation with your client, so you can show them, hey, you know, this is what it's going to cost you. And you know, hopefully what you're going to be able to show them is that based on their volume of transactions, it's not going to cost, let's put it this way, the benefits are going to far outweigh the cost in terms of, A, the peace of mind that comes with knowing your sales taxes are handled and your tax returns are going to get filed, and somebody else is essentially taking responsibility if anything does go wrong. Like Jesse pointed out earlier, if you get a negative outcome in an audit, Avalara will assume certain responsibilities with respect to that. So, you know, it's important to make sure that your client understands these implications, because the benefits, while perhaps somewhat intangible, at least at the outset, until or unless something happens, will likely, I think I would go as far as to say, almost definitely far outweigh whatever the cost winds up being or looking like. So do the calculation ahead of time, go to that pricing page and get a sense based on your client's volume of what it's going to cost them before you have the conversation with them where you're trying to convince them to, you know, opt into Avalara as the sales tax solution. We are out of time. Any last minute questions? And then I'll turn it back over to Jesse for anything he wants to say by way of sort of parting words. We'll give everybody a minute. And Jesse, if you want, you can turn your screen sharing off and just kind of go back to the video.
There we go.
So anybody want to say anything, ask anything? You got like 1 minute. We actually went a little bit over today, but it's okay. It was a good, solid conversation here. And Diana, put the link to the location in the App Store at Intuit right there in the chat. So make sure you bookmark that before we end. And with that, Jesse, thank you so much for taking the time to be with us today. I think this was, you know, huge information people really needed to hear. And I think a lot of people have been commenting saying they're going to take notes. And so again, I'll remind everybody, reach out to Brian Austin at Avalara, and he'll make sure you get the deck that Jesse was presenting today. And, you know, we'll see you in the Between Wall and Main group on Facebook. Yeah. So obviously, if you have any questions there, I'll make sure that our friends at Avalara are in that group. I believe Brian and Diana already are in there. Jesse, you know, please feel free to request to join. I'll let you in. Yep. You know, if you have questions, it's a great place to go to get those questions answered. Thank you all so much for being with us today. And next week, we'll have another great Zoom in Between Wall and Main. I'm going to be bringing on my friends from Expensify.
Thank you, guys. Appreciate your time. Pleasure joining you.
Have a great day.
You too.